Good morning everyone, we are the Group 10 and our group name is Natos Binsere. My group member is Amado, Angulo, Bernardo, Disperos, and Padua.
Good day everyone, my name is Kyle Chadwick S. Angulo. We will be discussing Chapter 10, Standard Cost and Variance. The goals of standard costs and variance is to manage and control costs. Basically, sa standard costs and variance, i-evaluate natin kung mapapagastos or makakatipid tayo this year. Efficient or inefficient ba tayo? These are the questions that will be addressed in these topics. Standard is a measure of acceptable performance established by management as a guide in making economic decision. Para masabi natin ang performance na naganap is acceptable, dapat mayroon tayong standards. Dapat mayroon tayong benchmark or criteria para masabi natin na acceptable performance. Standard, ito ay ang dapat or should be, it's the benchmark basis and measure. For example, mayroon kang midterm accounting exam and in order for you to pass the exam, kailangan makakuha ka ng grade na at least 75% and what we call the standard passing grade. Next is standard, are also widely used in managerial accounting where they relate to the quantity and costs or acquisition price of inputs used in manufacturing goods or providing services. Next is quality and price standards are set for each major input such as raw materials and labor time. Quality standards indicate the quality of raw materials or labor time required to produce a unit of product or to provide services. For example, auto service center has a set labor time that it should take to complete certain work tasks. Another example, McDonald's has a standard in preparing their foods before delivering to customers. They have exacting standards for the quantity of meat to be used in a sandwich. Next is cost standard. Specify how much should be paid for each unit of the input. For example, in hospitals, they have requirements and recommended standards for providing quality service to their patients, and companies like construction and manufacturing has certain standards or rules that they have to follow. Price standards specify how much should be paid for each unit of the input. And then once we have our standard we can employ something called management by exception, and that's when we confer our actual results with our standards. So if our standards is the while line anything over that would be more than the predicted, and any deviation that are significant then would be brought to the attention of management as exception. Variance analysis cycle is a continuous 5-step process. You can see that we start here a preparation of the standard cost performance report. Analyze variance, highlight variances that are difference between actual results and what should have occurred according to standards. And those variances are going to ask certain questions like why did this variance occur? Why is this variance larger than it was last period? Then significant variances would be investigated to discover their root causes, and then corrective actions would be taken so that the next period operation are carried out. When we start the cycle all over again. Setting direct materials standards. Now ideal standards can only be attained under the best of circumstances, so they don't allow for any work interruption. They require employees to be continually working at 100% peak efficiency. In the real world, this just is practical, so we use something called practical standards, which are high but they are attainable. Computing standard costs. So manufacturer typically prepare standard costs for the direct materials, direct labor, and manufacturing overhead for each type of unit or product. The price of a unit for direct material should reflect the final delivered cost of the materials. Standard price per unit. The direct materials price standard is the cost per unit of direct materials that should be incurred. Standard quality per unit for direct materials should reflect the amount of materials required for each unit of finished product. Standard quality per unit. The direct materials quantity standard is the quantity of direct materials that should be used per unit of finished good. Standard quality would be the amount needed to meet the production design. A bill of materials is a list that show the quality of each type of materials in a unit of finished product. Standard price per unit. The direct materials price standard is the cost per unit of direct materials that should be incurred. Standard quality per unit for direct materials should reflect the amount of materials required for each unit of finished product. Standard quality per unit. The direct materials quantity standard is the quantity of direct materials that should be used per unit of finished good. Standard quality would be the amount needed to meet the production design. A bill of materials is a list that show the quality of each type of materials in a unit of finished product. Computing standard costs. So manufacturer typically prepares standard costs for the direct materials, direct labor, and manufacturing overhead for each type of unit or product.
Good day everyone, I am Bernardo Oliveros and I'm going to report about the settings of direct labor standards. Under sa table na to, meron tayong two factors which is first is the standard rate per hour, second is standard hours per unit. Dito sa una, standard rate per hour is a single rate that is used to reflect the mix of wage earned. While dito naman sa second is standard hours per unit, uses time and motion study for each labor operation. Then next is settings of variable manufacturing overhead standard. Meron din itong dalawang factors. First is the price standard rate. It is the variable portion of the predetermined overhead rate, while quantity standard is the activity allocation based for predetermined overhead. Next slide is the standard cost card. This includes the cost standard, which indicates what should be the cost of the quality standard. The standard cost card shows like this. Yan, itong table na to. As you can see, like this for the direct materials. Yan, yung A mo multiply mo siya sa B equals to standard cost per unit of the direct material. Then lang siya, the same lang siya for the direct labor and variable manufacture overhead. Then add mo siya, then add all the total standard cost per unit to get the total, para makuha yung total standard unit cost. Okay. Next slide is the using standards in flexible budgets. The standard cost per unit of direct materials and direct labor and overhead can be used to compute activities and spending variances. Spending variances becomes more useful by breaking them into price and quantity variances. Variances. The next slide will show you the illustration of breakdown of inputs to becomes the spending variances. Itong table na to. Yan. Yun lang po. Thank you.
Good morning everyone, I am Dean Meryl Tungke and I am the leader of Group 10. My first topic is about general model for variance analysis. Variance analysis has two parts. It is the price variance and quantity variance. Price variance has actual price and standard price, wherein yung actual price is yung ginastos to produce a product. And standard price naman is yung pinaka-estimation para sa isang expected cost. Meron din itong quantity variance, wherein it has actual quantity and standard quantity. Yung actual quantity naman is yung dami ng input ng items na nagamit. While standard quantity naman is the standard quantity allowed for the actual output of the period. Second is price and quantity standard. Price and quantity standard are determined separately for two reasons, which is the purchasing manager and production manager. Purchasing manager is responsible for the material purchases prices, and production manager naman is responsible for the quantity of raw materials used. The buying and using activities occur at a different time. Raw materials purchases may be held in inventory for a period of time before use in production. Third is variance analysis. Variance analysis has two parts. It is the price variance and quantity variance. Price variance has material price variance, labor rate variance, and BOH rate variance. While quantity variance has material quantity variance, labor efficiency variance, and BOH efficiency variance. Fourth is the formula for general model for variance analysis. Para naman po makuha ito, kailangan po nating hanapin ang AQ, AP, SP, SQ, and SP. AQ means actual quantity of input, and AP stands for actual price, SP stands for standard price, and SQ stands for standard. After naman po nating makuha yon, kailangan naman po nating i-multiply ang AQ multiplied by AP, AQ multiplied by SP, and SQ multiplied by SP. And after that naman po, pag nakuha na natin ang total, kailangan naman po nating gamitan ito ng subtraction para makuha natin ang price variance and quantity variance. Para naman po makuha natin ang price variance, kailangan nating i-subtract ang total ng AQ and AP and total ng AQ and SP. Para naman po makuha natin ang quantity variance, kailangan nating i-subtract ang AQ, total ng AQ and SP, and total ng SQ and SP. And after that, para makuha naman po natin ang spending variance, kailangan po ulit natin itong gamitan ng subtraction. Susubtract po natin ang price variance minus quantity variance, at ang total po nito is ang magiging spending variance natin. Learning objective number 1. Compute the direct materials and price and quantity variance and explain their significance. First example is Glacier Peaks Outfitters has the following direct materials standard for fiber peel in its mountain parka. 0.1 kg of fiber peel per parka at $5 per kg. Last month, 210 kilograms of fiber peel were purchased and used to make 2,000 parkas. The material cost a total of $1,029. After reading the problem, we need to find the actual quantity, actual price, and standard quantity. Actual quantity is 210 kilograms. Actual price is 4.90 per kilograms. Standard price is 5 per kilogram. And standard quantity is 200 kilogram. After finding the variance naman po, we will proceed to multiplication. 210 kilograms times 4.90 per kilograms pag tinimes po natin ito is equals to $1,029. Second naman po is the actual quantity times standard price. 210 kilograms times $5 per kg. Pag minultiply po natin ito is equals to $1,050. Third is standard quantity times standard price. 200 kilograms times $5 per kg. Pag minultiply po natin ito is a total of $1,000. Next is, after getting this three total, the $1,029, $1,050, and the $1,000, we need to use subtraction naman po to get the price variance and quantity variance. To get the price variance, we need to subtract $1,029 minus $150 is equal to $21. Second naman po is $1,050 minus $1,000 is equal to $50. Second naman po is multiplication po ulit. 0.1 kg per perka times 2,000 parkas is equal to 200 kilograms. So, saan nga po ba nanggaling yung 0.1 kg and 2,000 parkas? Back to the problem po, 0.1 kg is the fiber peel per parka. And yung 2,000 parkas naman po, ito po yung purchase and use to make 2,000 parkas. Part 3 naman po is we need division. $1,029 divided by 210 kilograms. So, saan nga po ba nanggaling yung $1,029? Yung $1,029 po is the total of actual quantity and actual price, while yung 210 kilograms naman po is the actual quantity. And after po natin silang i-divide, ang total po nito is 4.90 per kilogram. Next is responsibility for materials variance. So, sino nga po ba ang responsible for materials price variance? Ang responsible po dito is the purchasing manager. While in material quantity variance naman po, ang responsible naman po dito is the production manager. The standard price is used to compute the quantity variance so that the production manager is not held responsible for purchasing manager's performance. Next is controllability of materials variance. Take note po na the materials variance are not always entirely controllable by one person or department. Kasi po, the production manager may schedule production in such a way that is require express delivery of raw materials, while purchasing manager naman po may purchase lower quality raw materials, resulting in an unfavorable materials quantity variance for the production manager. Another example naman po. Hanson Incorporation has the following direct material standard to manufacture 1 CP. 1.5 per pound per CP at $4 per pound. Last week, 1,700 pounds of materials were purchased and used to make 1,000 CPs. The material costs a total of 6,630. After reading the problem, we need to find the AQ, AP, SP, and SQ. AQ is 1,700 pounds. AP is 3.90 per pounds. SP is 4 per pounds. And SQ is 1,500 pounds. After finding the variance, we need to use multiplication again. AQ times AP, AQ times SP, and SQ times SP. 1,700 pounds times 3.90 per pound is equal to 6,630. Another is 1,700 pounds times 4 per pounds is equals to $6,800. And lastly, 1,500 pounds times $4 is equals to $6,000. After getting the total naman po, isusubtract po natin yung total. 6,630 minus 6,800 is equal to 170. Iyon po ang magiging price variance natin. At para makuha naman po natin yung quantity variance is 6,800 minus 6,000 is equal to 800. Yung po ang ating quantity variance.
Good day everyone, my name is Jessica Nicolene Amodio. My topic is all about direct labor rate and efficiency variances. Learning objective: compute the direct labor rate and efficiency variances and explain their significance. Labor variances. So, the labor efficiency or the variance attempts to measure the productivity of direct labor. No variance is more closely watched by management because it is widely believed that increasing direct labor productivity is vital to reducing costs. So, what is variances? Variances are the differences between total actual cost and total standard cost. If actual costs are less than our standard cost, this will result in a favorable variance. If, however, our actual cost exceeds standard cost, this will result in an unfavorable variance. Here in the screen, you can see the labor variance. An example: Glacier's Peak Outfitters has the following direct labor standard for its mountain parka: 1.2 standard hours per parka at $10 per hour. Last month, employees actually worked 2,500 hours at a total labor cost of $26,250 to make 2,000 parkas. Variances. The process of determining direct labor variances is the same as for the determining the direct materials variances. Total labor variance is the difference between the amount actually paid for labor versus the amount that should have been paid. So we're back here at the example of labor variances. We're back at Glacier Peak Outfitters, and then they have the following direct labor standards for the mountain parka: 1.2 standard hours per parka at $10 per hour. So that's our standard. Then they're telling us that the actual down here last month, employees actually worked 2,500 at a total labor cost of $26,250 to make 2,000 parkas. So the actual hours work was 2,500. The standard hours would be 2,400. Now they paid the actual rate and it was 1,050 per hour, and they should have been paid $10. So you can probably see in your head, while we worked more hours than we were allotted and our actual rate was higher than we had as our standard. So we were going to have some unfavorable variances here. So again, the labor rate variance is the difference between the actual total cost for the labor and the total amount that we should have been paid for every hours. So in this case, it's $1,250 unfavorable. The labor rate variance is unfavorable because the actual wage rate here is 50 cents per hour than the standard wage. And then the labor efficiency variance, you can see if quantity variance is the difference between the standard cost, which is the standard rate, and the actual hours of labor used in the production versus the standard hours that should have been used, and it's $1,000 unfavorable. The efficiency variance is unfavorable because the actual quantity of hours worked is 100 more, 2,500 instead of 2,400. Then allotted again, we can also do this by using an equation: labor price variance equals the actual hours time the actual rate minus the standard rate, and the labor quantity variance equals the rate times the actual hours minus the standard hours. So in the above labor price variance, 2,500 was the actual hours, and then the difference between the two labor rate is $0.50. That give us the 1,200 unfavorable, and the standard rate was $10 per hour. Actual hours worked was 2,500. The standard hours was 2,400. That's a difference of 100 times $10 per hour. That's why we get $1,000 unfavorable. Responsibility for labor variances. When we think about responsibility for labor variances, we usually think production manager are usually held accountable for labor variances because they can and are supposed to influence key factors: the mix of skill level assigned to work tasks, level of employee motivation, quality of production supervision, quality of training provided to employees. So, production managers should be influential and responsible for all things, but there's always the blame game, right? Next is controllability of labor variances. The controllability of labor variances are not always entirely controllable by one person or department. In real business, we would need to get down to the bottom of this and find out what's going on. Just the finger pointing isn't gonna help us improve our company. And remember, the whole reason for doing this and looking at our standards and analyzing all of this is to improve our company's overall performance. So the labor variances are not always controllable. The maintenance department manager may do a poor job maintaining production equipment. This may increase the processing time required per unit, thereby causing an unfavorable labor efficiency variance. Next is the purchasing manager. It may purchase lower quality raw materials, resulting in unfavorable labor efficiency variance for the production manager. That will be all. Thank you for listening. Once again, this is Jessica Nicolene Amodo.
My name is Jermaine Sparrows. Learning Objective 3. Compute the variable manufacturing overhead rate and efficiency variances and explain their significance. Responsibility for labor variances is the Human Resource Department is responsible for labor rate variance because it is the one that is concerned with the hiring and training of employees. For example, is Glacier Peak Outfitters uses direct labor hours as the allocation based on its predetermined overhead rate. The company has the following standard variable manufacturing overhead cost for each mountain product. 1.2 standard labor hours per parka at $4 per labor hour. Last month, employees actually worked 2,500 labor hours to make 2,000 parkas. Actual variable manufacturing overhead for the month was $10,500. Responsibility for labor variance. 2,500 hours times $4.20 per hour is equals to $10,500. Yung actual hours and standard rate is 2,500 hours times $4 per hour is equals to $10,000. Yung standard hours plus standard rate is equals to 2,400 hours times $4 per hour is equals to $9,600. 1.2 labor hour per part times 2,000 parkas is equals to 2,400 hours. $10,500 divided by 2,500 labor hours is equals to $4.20 per hour. Variable manufacturing overhead variances using factored equations. Variable manufacturing overhead rate variance equals to 2,500 hours, $0.420 per hour minus $4 per hour is equals to 2,500 hours is $0.20 per hour equals to $500 unfavorable. Variable manufacturing overhead efficiency variance is equals to $4 per hour times 2,500 hours minus 2,400 hours is equals to $4 per hour is equals to 100 hours equals to $400 unfavorable. Hanson Incorporation has the following unvariable manufacturing overhead standard to manufacture one ZP. 1.5 standard labor hours per ZP at $3 per direct labor hour. Last week, 1,550 labor hours were worked to make 1,000 CPs and $5,115 was spent for variable manufacturing overhead. Thank you for listening once again. My name is Charmaine Speros.
I'm Angela and I'm going to report on important supply materials variances. The quantity variance is computed on the quantity used. The variances is computed on the entire quantity purchased. For example, Glacier Peak Outfitters has the following direct material standards for fiber fill in its mountain parka. 0.1 kg of fiber fill per parka at $5 per kilogram. Last month, 210 kilograms of fiber fill were purchased at a cost of $1,029. Glaciers used 200 kilograms to make 2,000 parkas. And yung solution is actual price includes the total cost of materials, direct labor, and overhead costs that were used in making a product. While standard price is a fixed price, yung price variance is yung difference between expected cost and actual cost ng isang product. The price of a product is often affected by the quantity of items ordered. To get the variance, you need to multiply the actual quantity purchased with the actual price of the product, and then the actual quantity purchased with the standard price. Compare the two answers, then you'll get the price variance. The price variance is considered favorable when the actual price are less than the standard price. When the quantity variance shows the difference between the actual quantity of materials used in producing a product and the quantity that is expected to be used in the production process. To get the quantity variance, multiply the actual quantity used and standard quantity used with standard price, then compare the two answers. The variance is favorable when the actual quantity used is less than the standard quantity. Then advantage of standard cost. Standard costs are key elements of management by exceptions approach, and standard can greatly simplify bookkeeping. Standard can provide benchmarks that promote economy and efficiency, and can support responsibility accounting system. Then yung potential problem is standard cost variance reports are usually prepared on a monthly basis and contain information that is outdated. If variances are misused as a club to negatively reinforce employees, morale may suffer and employees may dysfunctional decisions. Label variance assume that the production process labor based and that labor is variable cost. These assumptions are often invalid in today's automated manufacturing environment where employees are essentially a fixed cost. Yan lang.